Contrary to popular belief, payments don't only flow customer to merchant. There are actually two fundamentally different models used to move money. 1. Push payments. 2. Pull payments. Understanding the differences between them is key to how modern payment platforms are built. First, what are pull payments? Think of pull payments as the standard model for card transactions. A merchant initiates the transaction and pulls funds from the customer's account. This is how card payments work. Subscriptions are billed, e-com checkouts happen. Pull payments run on traditional card rails involving issuers, acquirers, and networks. They also support reversals like refunds and chargebacks. All that to say, pull payments are designed to collect dollars from customers. What are push payments? Push payments flip the script, so instead of pulling funds, a business sends money directly to a user. This is powered by rails like Visa Direct, MasterCard. Send with push payments, funds move from business to consumer, settlement can happen in near real time, there are no traditional chargebacks. This model is used for gig worker payouts, marketplace seller disbursements to insurance claims to wallet withdrawals. Push payments are designed to move money out, not just in how these models differ. While both use a similar underlying infrastructure, they solve for very different problems. Pull payments. Merchant controls initiation. Customer is the source of funds, optimized for checkout and commerce. Push payments. Business controls disbursement. Business is the source of funds, optimized for speed and payouts. For years, payments infrastructure focused almost entirely on pull, but in recent years it's changed quickly. Why push payments are growing fast? Two major shifts are happening. Card networks expanding beyond pay-ins, user expectations for instant access to funds. Networks like Visa and MasterCard are investing heavily in real-time disbursements, cross-border payouts, wallet and account funding. At the same time, users have come to expect instant earnings access, real-time refunds, immediate liquidity. Push to card meets that demand in a way ACH and wires often can't. Why this matters for merchants and fintechs: payments are no longer just about accepting money, they've become about orchestrating money. Movement in both directions, that unlocks better user experiences, instant payouts, new product models, wallets, marketplaces, gig platforms, faster access to funds for end users. The platforms that win aren't just good at checkout, they're good at payouts too. Part 2. Push payments. In CBPR plus push payments occur when the payer-debtor initiates the transaction, actively sending funds to the payee, creditor. In the CBPR plus ecosystem, these are highly favored for their low error rates and lack of disputes. Key message: PAX.008, financial institution to financial institution customer credit transfer, is the primary message for push payments. Examples: cross-border wire transfers, digital wallet payments, and one-off transfers where the debtor controls the payment initiative. Process: the debtor sends a push command to their bank, which then sends the structured ISO20022 message to the creditor's bank. Pull payments in CBPR plus pull payments occur when the recipient, payee, initiates the transaction, pulling funds from the payer's account. AirWallex key messages, Pain.001, customer payment initiation, and related messages are used for initiated direct debits. Examples: recurring subscriptions, direct debits, such as SEPA, or card payments where the creditor initiates the payment based on stored credentials. Usage: these provide predictable cash flow for businesses and convenience for customers who do not want to initiate every transaction. CBPR plus implementation context migration. Deadline: the coexistence period ends in November 2025, at which point ISO20022 becomes the mandatory standard for SWIFT cross-border payments. Key message types: PAX.008/PAX.009, customer credit transfers and FI to FI payments. Pain.001, customer payment initiation, used for initiating pull payments. camp.xxx, cache management messages, used for reporting and tracking, such as camp.052, camp.053, camp.054. Benefits: CBPR Plus enables richer data, for example, more structured beneficiary details, better compliance screening, and higher STP, straight-through processing rates.